So Jeff Ubben joins us now. He's the founder and managing partner of Inclusive Capital Partners, formerly of ValueAct Capital. Thank you very much for joining me today, Jeff.
Great to be here, Sarah. Thanks.
And we're going to kick off a pretty big statement from you. Your movement to green the world, not just run a fund. That's pretty ambitious just for one guy, right?
Yeah, I mean, I was a shareholder only director for 20 years. And I would say 5 years ago, I started, maybe it was coincident with the election in our country, which was indicative or symptomatic of a have and have not society. But I was in boardrooms for many, many years, and the health of the customer, the employee, the planet really didn't come up. It was just the shareholder. Low interest rates for the last 10 years have, made shareholder activism really profitable because you can financially engineer your way to good returns. But again, that wasn't working for the greater good. And I started to think there's got to be, and by the way, when you have an abundant resource like interest rate, like capital that costs you nothing to borrow, there is not a big return attached to financial engineering from here. The new constraints were, environmental and social. That's where things were. That's where the planet was pushing back, for instance. And constraints present opportunities. If you can invest well behind them or into them, you can generate an excess return. So my thinking was that's where the big long-term returns are going to be, to solve these problems, not financially engineer our way to the answer. And what better way to do it with big public companies, because that's the system change we seek. I think impact investing.
Let's pick up on that because, like you see the name like Exxon, you've talked about a social, environmentally minded fund. People are saying, you need to live up to that. And then they see you're linking up with ExxonMobil. So how does that marry together?
Well, I mean, energy is an essential good. The idea of carbon avoided versus carbon reduction is starting to finally be understood. Renewable energy today is not additional. It doesn't present additionality. It's economic on its own because of the cost curve and photovoltaic efficiencies and big wind turbines. So to get credit as an asset manager, for instance, for building renewable energy, that is going away. The tough stuff, the really hard stuff, like reducing carbon, is where the next focus is going to be. And when you think about Exxon and the cash flow and the balance sheet and the fact that they have 40% of the global market share in carbon capture over the last 20 years, that's a business opportunity waiting to happen.
Let's pick up on that because, when you think about that, like you talk about investment opportunities given the high valuation of other stocks maybe in the market, isn't this about reputation management for some of these companies like Exxon, BP, because they're going to lose their license to operate. The SEC is closing in on them if they don't do something to make a change.
I mean, the externalities of the business are impacting the stock price. That's the opportunity for a value investor. 2 years ago, 3 years ago, perhaps you could argue Exxon was over-investing in a mature business and the market didn't like it. And I think that's fine. That's fair. Just recently, they took their capital spending down by half to a third, and they recognized that they are in a mature business. Their production profile went flat versus growing on a prospective basis. And what that does is that it gives you confidence that there's going to be a lot of cash flow to redeploy. And we really can't do this hard stuff, carbon reduction, without them. We need them. So to villainize an industry that's essential, and maybe even try to, quote, put them out of business like the environmentalists would, is not productive. They have a great workforce. They have all this experience in carbon capture, tons of experience in hydrogen and biofuels, which are definitely going to need investment to solve this. So I think, once you have a stock price that reflects as if it's a dying business and you make it a growing business, carbon becomes an investment opportunity in a mature business. Carbon reduction. That's the thing. Buying back your stock is worthless, but being able to reinvest at high returns, as they did many years ago at hydrocarbons, that's a revaluation opportunity.
And Jeff, just in one word, what was the change you'd like to see to increase that impact in 2021?
The ESG movement worries me because it's been commodified and it's all passive, and it's a way for asset managers and asset owners to own what they always were going to own. Apple, Amazon, Facebook, because they're asset light. I want a recognition that those companies that are not already green but that are greening and they need a reward system are to be recognized in ETFs. That way we get the system change we want because we get reinvestment.
Fascinating. Thank you so much, Jeff, for joining us today. Jeff Ubben, founding managing partner of Inclusive Capital Partners.
Wow, that went fast. It's good to see you, Sarah. Take care.
Thank you for your time.
And thank you, Sarah, and fascinating insights there from Jeff Ubben indeed. So let's get back to the results of that poll that you all contributed to and see who do you think is going to lead the transition? Who should be responsible for this? So let's just take a look and see what was on your mind when you pushed the button on that poll here. So who should lead the transition? So let's see what we've got. We had good choices there. And, ooh, the government and regulators. Okay, but coming in second place there, we do have the private sector. We got lots of commitments today. And then we've got also the regional institutions. So lots of work to be done. And clearly, it's not really anybody's responsibility in one way. It's everybody's responsibility. It's about bringing every stakeholder into this in terms of what you've been hearing today. So there you've had it, a very rich and information-led 2 hours of tremendous content from great speakers and great leaders in this industry. And we really hope that you've been engaged, informed, educated, and indeed hopefully inspired to take some action. Now the event is drawing to a close. I've been really happy here and thrilled to be your MC for the day, so thank you all so much. And I want to hand it back now to Richard Attias, the CEO of the FII Institute, because I believe, Richard, you have a little surprise for us, perhaps. Over to you.